And Laura, now, even with today's positive housing news, some are predicting home prices aren't at a bottom.
Yeah, that's right. And that's also contributing to the selling we're seeing, especially in those housing-related stocks. Analysts over at Deutsche Bank say U.S. home prices may fall, get this, another 14% before reaching a bottom. Now, those price declines, the firm says, will be led by New York and Orange County, California. And a big reason why analysts say rising unemployment will offset any improvement in affordability, with analysts at the firm saying the bottom is getting closer, but we're not quite there yet. Mark.
Bloomberg's Laura Lee joining us. Laura, thanks. Now, for more on the housing front, we have Patrick Newport, U.S. economist for IHS Global Insight. He expects that in the fourth quarter and going forward, residential investments will start adding to growth for the first time in 4 years. Patrick joins us live from Lexington, Massachusetts. Sir, thanks for joining us on Bloomberg. And talk to me about these housing numbers. We see housing starts jumping 17.2% from April's all-time low. What are we to make of that?
Well, the headline number is impressive. The details are mixed. There are two markets out there. There's a market for single-family homes, which is starting to improve. It hit bottom in January. Permits, single-family permits, improved 7%, and they improved across all 4 regions. That market is improving. The market for multifamily units is, however, in recession and not doing very well. That number increased 61%, but from a very low level, and the increase was not statistically significant. You've got to look at the permits numbers. The permits numbers are down for the 11th month in a row. They were down 8%. They're at an all-time low. That market is just in horrible shape.
Are May's numbers a precursor for some good news going forward?
Well, it's good news in the sense that the single-family market is improving, and that's about 4/5 of the total housing market. The market for apartments, however, is not doing very well. And the reason for that, I think, is the same reason that the commercial real estate market isn't doing well. There's just builders just can't get credit to build homes, or they're having problems refinancing existing loans.
Mr. Newport, I'm glad you brought that up, because it seems that in this whole housing discussion, the discussion about apartments gets lost in here, doesn't it?
Well, it does get lost for good reason. The reason is because the recession has mainly hit the family for single market homes. We only began to see the construction market for apartments start to turn down about a year ago, but the decline has been it's been mind-boggling. It's dropped from a rate of 400,000 last June to about 100,000 in May this year.
The market for the multifamily homes, just how deep of a slump are we talking about?
Well, the good news here is that it's already fallen to 100,000. It can't drop much further than that. So going forward, I think we're going to see both the multifamily and the single-family construction market start turning around. And as you said, adding to growth by the fourth quarter of 2009. That's really good news, because we don't have very many drivers that will add to growth next year. We have a fiscal stimulus, but now housing, in all likelihood, will be a positive for growth in 2010.
And one of the other pessimistic tentacles that's dealing with this, some builders, they're just overwhelmed with debt, aren't they?
That's correct, and apparently it's mainly those who build apartments, but it's really across the board, and I think that's the main reason that the market for apartments is practically just ground to a halt right now. They're either overwhelmed with debt, or they can't find the financing to build projects which would make them profits.
How did residential investment cut into real GDP growth in the first quarter of the year?
In the first quarter, I believe the drop was about 1.4%. We're expecting the drop to be about half of that in the second quarter, and a little bit smaller than that in the third. But going forward, after the fourth quarter, it will be a positive for growth. And so it's a swing from being a negative to being a positive. That's good news.
Yeah, I know it's kind of hard to predict this, given the vagaries of the market and of the global economic climate. But a lot of people have told us here on Bloomberg News that sometimes it's not enough to just look at the numbers, but it's probably even more informative to look at the internals. What are the internals telling you? What is this housing market going to look like, say, a year from now?
A year from now, it's going to look a little bit stronger than it is now. The recovery is going to be a very slow one. We think it's going to take about 2 to 3 years. But by the year 2011, we're going to have to really ramp up production to meet underlying demand. Underlying demand is household formation and replacement demand. That number is a very big number. It's about 1.5 million. But for another 2 years, we have to continue building at a number way below that because there's so much excess out there.
You've been doing this for a while. I'm curious, given the downturn and given where we are right now, is there something people aren't missing? Is there that forest through the trees thing going on here that a lot of us aren't seeing?
Not really. I think that people are. I think that people are finally understand the dimension of the problem. I guess one thing
is that something they didn't before?
I think most people didn't understand the dimension of the problem and didn't quite understand how a sector that's only 5% of the economy can drag the rest of the economy and the rest of the world down.
That's exactly. I'm glad you brought that up because that's where I was going. It's such a small segment, but the ability to really shake the foundations of the global economy, it's rather stunning, isn't it?
It certainly caught us by surprise. We knew we and just about everyone else missed the call. Nouriel Roubini got it right, and maybe 3 other people got it right, but that's about it.
Patrick Newport of IHS Global Insight joining us today. Mr. Newport, thanks for your insight. We appreciate it.